Hi there, good morning. You've tuned into ET Now, and this is Why Now Sell Now with me, Shail D'Souza. Along with me, I have Vinny Motiwala. Very good morning to you, Vinny. And looks like it's a great day coming in for the markets. We are holding on to strong gains, 0.5% uptick coming in for the benchmark indices. The broader markets actually, they're shining bright in today's trading session. Look at the mid-cap as well as the small-cap index. Both of them have hit a fresh record high levels in today's trading session. So that's the way how the markets are looking like at this point in time. Let's take a look at what Nifty Bank is doing. Nifty Bank is seeing a tad bit of underperformance compared to the benchmark indices. Nevertheless, trading with gains of about 0.4%. If you look at the gainers then, Tata Steel, Axis Bank, Hindalco, Tech Mahindra as well as Eicher Motors that are among the top gainers on the Nifty. While on the losing end today, you have BPCL, Power Grid, Apollo Hospitals that are actually lagging in trade. BPCL being the top loser on the Nifty, 1.5% downtick coming in for that particular count. In a short while from now, as you can see on the bottom of the screen, we will have that exclusive conversation coming in with the oil minister himself to understand the math behind the LPG price cut as well as the scenario going ahead for the OMCs. So that's the exclusive interview that we'll be cutting to very shortly from now on. Talking about the sectoral indices then, and talking about the sectoral indices, you have the IT index, metal index that are holding on to gains, auto index also seeing good gains in today's trading sessions. That's the way how the markets are panning out at this point in time, Winnie. Yes, good gains coming in for the markets, but let's go across to ET Now and ET Now Swadesh.
Mr. Hardeep Puri, India's Union Minister for Housing and Urban Affairs and Minister for Petroleum and Natural Gas. Mr. Puri, what a pleasure to have you on ET Now. Thank you for joining us. Mr. Puri, in an aim to attempt the common man, the government has decided to cut LPG prices by 200 rupees per cylinder. But my next question is, so that who will be bearing the impact, government or OMCs? And you'll appreciate the spirit of my question, sir. The reason I'm asking this is because there is a perception that the impact would be borne by OMCs and they could take a hit of about 7,500 crore.
First of all, let me thank you very much for having me on your show. And as is your style and ET Now, you've come to the very heart of the issue. I think the reduction in price of the cylinder by 200 rupees has been welcomed by all, barring a few of my cynical friends on the opposition in the opposition benches, some in the House and some outside. This is always a question whenever you deal with energy as to who will take bear the burden of a price reduction. You know, in an ideal world where you would allow market forces to establish the price of petrol and diesel at the bunk or piped gas, natural gas or gas cylinders in a world which was completely, let's say, I choose my words very carefully, free from all desires to cushion the common man, you could have chaos. And let me give you a few examples of what that chaos could be. The price of crude oil is determined by a global situation. We are dependent up to 80% of our requirements on imports for crude oil, about 55-60% on the import of natural gas. Now, if you were to add to the cost of production, the cost of insurance, the cost of freight, refining cost, refiner's margin, dealer's margin, etc., then you would not be able to control the price if it went up as it did from $19.56 a barrel. It shot up to $128 a barrel. But what do? Sometimes the government takes a hit. Like, for instance, on 2 occasions when it came to petrol and diesel, the Honorable Prime Minister reduced the price, reduced the excise we charge, and the price came down by 13 rupees and 16 rupees, November 21 and again May 22. And when it comes to gas, you had a very interesting situation. Our OMCs incurred a loss of 28,000 crores. Now, they are not operating on their own money, they raise money in the market. So you had to compensate them. So that 28,000 crores was compensated up to an extent of 22,000 crores. So in other words, you have a very interesting situation starting from sometimes in 2014. I was just going through a news clip which my friend and senior Vijay Kelkar had sometimes in December 2014, when the price of a cylinder was something like 1173 rupees. And he was saying, let the price go up, don't, because the fiscal deficit. Here we've got everything under control. You have a situation in 2014, an average person paid higher for a cylinder cost. He also paid for all the other services. Today, 80 crore of our citizens are getting 3 meals of dry ration in a day. You built Pradhan Mantri Awas Yojana, you built toilets, and yet the gas cylinder price has come down from 1100 to 900. There are 32 crore connections. And for those who are beneficiaries of the Ujjwala scheme, it has come down. It means that they were getting another 200 rupees directly into their khata or DBT. So that is there. Now, please see, in 2014, you had 14 crore connections. That has gone up to 32 crores or thereabout. Out of them, 9 crore 60 lakhs are beneficiaries of Ujjwala. When you give somebody an Ujjwala connection, you are incurring already an expenditure of 3,600 rupees. Now, every cylinder that they draw, they are allowed to draw up to 12 cylinders. They may not, they probably draw only up to 3.7 or 4 cylinders. They get 200 rupees per cylinder. Now, what does that mean? If you take, let's say, the average of 3.7 cylinders in a year, you take 365 days, you divide it, it comes to a 7 rupees expenditure per family on gas. And you're already giving them 3 meals of dry ration free. Plus, if I count all the other facilities that have been given, look at the situation in 2014 and what it is in 2023. I just want to make one final submission to you, my friend, that if you are to insulate the common man, I mean the economically weaker sections, the people who live below the poverty line, then both the government and the OMCs will have to do it. It's not as if the OMCs are collapsing. I can say with a degree of satisfaction that the OMCs today have registered very reasonable and healthy financial results. I'm choosing my words carefully. There are quarters when they do better than other quarters. But I think when the Prime Minister decides that the price of a cylinder, a 14-kilo cylinder, has to come down on the occasion of Onam and Raksha Bandhan by 200 rupees, the OMCs are happy, the country is happy. Some of my friends, cynical on the side of the opposition, are cribbing a bit, but their cynicism and their statements, which are irrelevant, I think will not be taken. It's being lapped up. It's been warmly welcomed by every sister of ours to whom the Prime Minister, as the Pratham Sevak, has given this Raksha Bandhan gift.
Sir, I just distinctly remember in December 2022, when we spoke about high energy prices because of war, your words were, OMCs have to play their role of being a good corporate citizen, and I'm glad they are playing that. Do you think increasingly that role will be played more given that crude is back above $85 now?
First of all, I want to thank you from the bottom of my heart for recalling my statement of December 22. When I described the OMCs as good corporate citizens, it was meant both as an encouragement and as my, subtle message to them that, when a crisis situation and global prices are very high, you should not, look at short-term profits, because the OMCs have large businesses. Some of them make big profits in a quarter, some less, but they're all doing reasonably well. Okay, now, oil prices today are around 85 or so. I am not unduly concerned because there is a large economy where the levels of consumption will remain to be seen. Plus, there is a voluntary cutback by OPEC Plus, and they are cutting back to keep their prices above 80. But I've maintained this repeatedly. If you keep oil prices at a high in a situation which is inflationary for a variety of reasons. There were stimulus packages, interest rates are still shooting up. Then it becomes a self-fulfilling prophecy. Then along with inflation, you get high oil prices, and then there's a tipping point at which demand begins to fall. So we are in that territory, but I can take advantage of your kindness and my ability to speak to your viewers that we are in a very comfortable position on availability, on affordability, and on sustainability. So on all counts, I think the Honorable Prime Minister and his guidance has ensured that we are in a position of reasonable safety and comfort.
Mr. Puri, the PSU stocks in general have created wealth for government and for minority shareholders because the entire PSU space now has got re-rated. But everybody is trying to still understand that is the government committed for PSU minority shareholders to make money, and the purpose of OMCs, will it be always be a good corporate citizen, or they will always reward minority shareholders also? Again, you'll appreciate the question and the spirit of the question, sir.
No, I appreciate the incisiveness of your question. Do you keep OMCs only to make them good corporate citizens? Certainly not. You will not be able to run the economy if you keep asking any sector, any segment to bear the cost of, at the expense of market forces. No, you have to navigate a careful and chartered course through this. You have to ensure that the shareholders who have invested in them get their returns, and the shareholders are rewarding them by investing more in them. I mean, when I came onto the scene 2 years plus ago, we had one company, I'm not going to name it, everybody said it's ready for disinvestment, etc. Today, it's one of our, star performers. Now, there are situations in which you cannot save a PSU, or you should not. I was Civil Aviation Minister when we had to deal with Air India, and I was clear. I could not go on every year to my senior colleague Nirmala ji and ask for 8,000 crores of handout to keep Air India afloat. So we took a tough call, we privatized it, and today the rest is history. Today Air India is ordering, 500 or 800 more crores. They're adding to the civil aviation manufacturing industry in the world. Boeing, Airbus placing orders. Look at another Indian airline, private sector airline. They're all in private sector now, by the way. Ordering another 700-800 planes. So governments have to step in with clear-headed and far-sighted decision-making. So the energy sector is now one in which the OMCs are doing well, and if the OMCs are occasionally asked to assume one of their many roles as good corporate citizens, they are not unhappy to do so, because when the country grows, the OMCs grow also. And these OMCs are now big players internationally. One of them is the 7th largest oil company in the world. So I think we should rejoice at the fact that the OMCs are playing ball with us.
Last but one question, I'll not extend our appointment beyond that. The big success story for 2022 was India's oil diplomacy, where we were able to get oil at a discount from Russia. Now we understand that the discount from Russia is decreasing. Is that true?
First of all, what you describe as the outstanding, diplomatic success story about getting discounted oil from one source, let me share with you my perception. We have done 2 or 3 things. We have diversified the sources of our supply. It used to be 27 countries, now it's 39 countries. And by the way, we are very clear in our minds that we will buy oil from wherever we can get it, as long as it is delivered to our point of importation at our ports at the lowest possible price. So we used to have a classical situation where out of the 5 million barrels in a day that we used to consume, we used to import, it was evenly divided between 800,000 barrels from one supplier to another. Now those suppliers change, and we have this very interesting situation that sometimes Iraq becomes the largest supplier, sometimes Russia. Discounts are a function of buying and selling. If the Russians think that they can sell the price, their crude, or if Saudi Arabia thinks it can sell the crude more expensive and people will buy it, discounts will not happen. But we are playing something called a market card. And I'm very happy to go on record. If India doesn't buy the 5 million barrels or it's going to go up to 6 million barrels, please let me know where you're going to sell from. So discounts will always be part of the game, whether they come from one source or another.
That's the new India, sir, what we should celebrate and what we're celebrating. My final question, sir, is that something which press has not really spoken about it extensively. Question, sir, is that nobody is really talking about it in media specifically, is that
yes,
India has started doing rupee trade with UAE. That really could be the game changer. Has it started, or is it only at a very experimental stage? And if it has started, do you see the rupee trade with UAE could be the game changing moment for India and for our energy security?
I would want to be modest and circumspect about this. Yes, we have a rupee dirham arrangement with the UAE, but the transactions in the oil sector are very minimum. So this is just a process which has started. It will require a comfort level on all sides, and there are other factors. Next time when we meet, we'll have a detailed exchange on that. And this is more in the realm of another colleague of mine. I deal with the commodity. I would be very happy to see more rupees being used, rupee payments being made. But just now it's at an infant stage. Thank you very much.
Appreciate your time, sir. Thank you very much.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and that before we slipped into a break, you saw that exclusive interaction with Oil Minister speaking about the fact that the LPG price cut, where he said that the government will be bearing the impact of the LPG price cut, and also he did say that they are not unduly concerned about the high crude prices. Apart from that, what the Oil Minister also spoke about is the fact that they are very clear that they will be looking to buy oil from wherever they get at the lowest possible price. So those are the key takeaways coming in from the interaction with the Oil Minister. But let's move on and let's start taking your queries then. Remember, viewers, this is a show where we get you answers for all of your stock-related queries. You can connect to us on the number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, then mention the buy price, the quantity, the time horizon as well. In that way, our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra joining us. Along with Kunal Bothra, we also have Vikas Sethi joining us on the show. Very good morning to you, Kunal, as well as Vikas. Thank you so much for joining us on ET Now. And today, viewers, we will be skipping that all-important BNS and Lens segment so that we can accommodate all of your queries. So let me kickstart taking the queries right away. Then the first one that I have is coming in from Ravi. He's writing to us from Chennai, and he has 300 shares of Godrej Consumers at 600 rupees per share. He wants to know whether he should book profits on this and instead look to buy Ircon and BHEL for the long term. Kunal, do you think that option is better? Go book out of GCPL and look to buy BHEL or Ircon for the matter of fact?
See, I think stock specific wise, it's a good strategy, but then you have to look at this in terms of the portfolio mix, because what you're trying to do is you're trying to sell a FMCG, a low beta or a moderate beta stock or a low risk stock and going into a high risk appetite names like Ircon, IRFC or maybe BHL, etc. So there is a dramatic shift of risk which could happen in your portfolio. So for that, there are a lot of internal parameters which you'll have to probably scan through. But yeah, if you ask me, as a natural shift from such stocks towards likes of BHEL as well as Ircon, etc., the chart patterns look a lot more stronger. These stocks are into the thick of momentum, and I think staying invested into these names or adding on to the stocks could be a good strategy. But the caveat is that you have to look at your internal portfolio mix and the way you want to structure it.
Vikas, good morning, and this one is coming from queries from Bisaka from Kolkata, and they're a long-term investor, vision of 2 years time period holding. They have 20 shares of Tega Industries at a price of 628 rupees, as well as 20 shares of Canfin Home at a price of 544 rupees. Should they continue to hold them or maybe book out profits now and shift to something like a Rolex ring or a Tata investment?
Good morning, Vinny. Good morning, Sharil, and good morning, Kunal. Now, as far as her two picks are concerned, both the stocks look fundamentally strong, and I think Tega has participated in the rally also recently. The stock has run up recently, and I think one should continue to hold on to both these stocks. They would give substantial upside or substantial returns from the current levels. So my advice to the investor would be to continue to hold on to these stocks.
Is coming in from Zenith Kausar, writing to us from Ranchi, Jharkhand, and she has 100 shares of Varak at a price of 378 rupees per share, 250 shares of Ramco Industries at 135 rupees per share. She wants to know what should she do with both the counters.
I would suggest to hold, Varak as well as Ramco Industries. Varak has been doing quite well. I think from 250 to now 430 plus levels, trading above the 50-day moving average on a consistent basis. So the trend seems to be a lot more smooth as well as stable for Varak. The next level of breakout, which I think is the previous high, is around 540 levels. That is what you can position yourself in terms of the targets for Varak over, say, the next 6 months or. And even for Ramco Industries, the stock seems to be coming back into a breakout mode. 200, I think, in this leg of uptrend should be taken out for the stock, and that could be a better level if you're looking to book profits.
Okay. Jay Krishnan from Kerala is holding 2 shares. One is Anupam Rasayan and other one is Bharat Dynamics. Anupam Rasayan, the buy price is 1,047 rupees, and Bharat Dynamics, it's 1,212 rupees. Vikas, for the medium to long term, how are both these stocks looking? Should they look to exit it and maybe buy something else, or continue to hold these stocks?
Now, again, the investor seems to have picked up right kind of stocks to ride from a long-term point of view. As far as Anupam Rasayan is concerned, the stock is fundamentally a very strong company, and I think over the last 2-3 days, we've been seeing some uptick in chemical stocks, and I think this stock would also do well. And since he is a medium to long-term horizon, I think there's no need to worry, and I'm sure he would get good returns from this stock. And as far as BDL is concerned, top quality defense stock, although the stock has run up and the valuations are not as cheap as it used to be, say, about 6 months back. But from here on also, I think it will do well. And even in the short term, I think there is a good trigger for defense stocks when US President is visiting India from the 7th to 10th of September. It's hardly a week away, and I think defense stocks would continue to do well. So Bharat Dynamics, from a long-term point of view, remains to be a good hold, and I would advise him to hold onto the stock.
Right. This one's coming from Satya, and this one is for you, Vikas. He wants to know for the long term which one is better, Tata Chemicals, and the other option he's given is between IRCTC and Praj.
I think Tata Chemicals certainly can be held on to from a long-term point of view. One can even buy the stock. These days we are seeing a surge in soda ash prices, and that's playing its part on all the soda ash and caustic soda and these kind of companies. So Tata Chemicals remains a good bet. And from among the 2 stocks which he has he's asked about IRCTC and Praj Industries, I suppose. I would go for a Praj Industries. I've been a regular recommender of this stock, and I'd recommended it at pretty lower levels. It's a company which manufactures ethanol plants, or which sets up ethanol plants, and this sector is doing well. So Praj, although the stock has gone up over the last 2-3 months, but I think even from the current levels, it could give you decent returns. And as far as IRCTC is concerned, there are other railway stocks which I prefer, so I would like to avoid that at the current moment.
Okay. On that note, viewers, you're going to slip into a very short break, but don't go anywhere, because after the break also, we'll be continuing with all your stock-related queries. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries then. And Kunal, this one is coming your way now. We have Ajay, who has Patel Engineering, SJVN as well as NHPC. Actually, they want to know whether it's a good time to start buying these stocks at the current levels.
Well, not exactly at current levels, but these are good stocks to hold on to it, provided you have, again, these are very high beta stocks. Now, I remember, I think Patel Engineering and NHPC, etc., these stocks have a tendency of going into SJV, and these stocks have going into a tendency of circuits on a regular basis. So since the markets are positive, it's more of an up circuit which you're seeing for these stocks on a regular basis. But then you have to adhere some sort of caution trying to enter too much quantity into these kind of stocks, because if the market gets into any kind of a corrective mode, these are the same kind of stocks which will also go into a sharp correction mode. So exiting those stocks at that point of time becomes a lot more difficult. That's why I would probably adhere a little more caution over here. You can look to trade these three names, but then the quantity over here has to be a lot more lesser than your traditional or your average quantity, which you would probably have looked out for in case if it was a large cap name.
All right, another one actually coming your way, Kunal, because he's asking for a 6-month view on two stocks. One is Suntech Realty and Radiant Cash. He wants to know whether should he buy this today itself. This one is coming from Moondada. He's writing to us from Pune.
Radiant Cash, I would not suggest a buy, even though the last, I think 3 or 4 weeks, the stock has corrected very sharply because of the recent correction. I believe that the stock probably has opened one more leg on the downside. Possibly a retest of that 90 mark could be seen something for Radiant. So I would probably wait for another 6-8 points on the downside before I would suggest you can look to buy the stock. For Suntech Realty, I'm not sure whether it's one of the best stock from the entire real estate space. Something which we've been advising regularly are the likes of DLF as well as Anant Raj. I think both these stocks hold merit from long-term play. DLF has also gone through time-wise correction, so I think that would be a much better bet.
Because this next query is from Pradeep from Kolkata, who's a long-term investor. They have a time period holding of 2 to 3 years. They hold currently 20 shares of Syngene at a price of 572, as well as 30 shares of Emphasis at 2,220 rupees per share. What should they do? Should they continue to hold this, or maybe look to exit and buy something like an IRCTC?
Again, there are good quality stocks which the investor has bought, and since he has a long-term perspective, I do not think he needs to worry that much. As far as Syngene is concerned, a good quality company from the pharma space, and the sector has started performing, so I think it's legs to go up, and I would advise the investor to continue to hold on to its position in Syngene. And Emphasis within the mid-cap IT stocks is a good quality stock, although the sector does not do as much as the markets do. But still, I feel mid-cap IT stocks would outperform large-cap IT stocks, and they would start performing from here too. And so I would recommend Emphasis to be also held on to.
From Geeta, who's writing to us from Dubai and wants to know about Nykaa. 1,500 shares at a price of around 237 rupees per share. Despite that lower price coming in for Nykaa, she's suffering a loss of approximately 42% now. What should she do?
So I don't think you should sell the stock just because it's been underperforming or going through a correction. There was this wave of rally for Nykaa where the stock tried to retest the 200 moving average. But what I would also advise is just to hold on to the existing stock, because the stock for the first time had shown some sort of recovery and stability. It tried to come back towards its 200 moving average, could not sustain that breakout, and it's now corrected again. Hopefully, in the second retest, if the stock sustains and breaks past above this long-term average, we can see a much more stronger and a powerful up move for Nykaa. So I would probably wait out for that move to play out, whether it happens in the next 1 month, 3 months, 6 months. Very difficult to anticipate, but you should give it time for the stock to try and confirm that breakout. I would suggest a hold, buy or add only above that 200 moving average breakout for Nykaa.
Okay, because the next query is coming in from Bharatwaj from Coimbatore, and this one is on Avalon Technologies. They want to know, for the long term, how is Avalon Technologies looking? Is it a good time to start buying this stock?
No, again, Vinny, it's a good quality company. I've been bullish on the entire electronics manufacturing space, and this also forms a part of it. Although my preferred bet over Avalon would be a Syrma SJS. I like that stock better or much more than Avalon. But Avalon also from here on, I think, would do well. So one can start buying into the stock in a staggered manner. But my focus would be more on Syrma from a long-term point of view.
All right, this next one is coming from Rakesh Bhatnagar, Kunal, and he has 1,000 shares of Parag Mill at 165, Som Distilleries 1,500 shares at 250 rupees per share. He wants to know whether he should stay put with these companies or look to exit, and his time horizon is 1 year.
I would suggest to hold on to both of these stocks. The only concern is the time horizon, because I'm not sure after such a kind of a fabulous rally for a stock like Parag Milk, I think if I'm not wrong, the year or the March low for the stock was almost at 65 or 70 rupees, and the stock is 200. So it's already run 3x in the last 6-7 months. I'm not sure whether for the next few months there could be more of an immediate upside for the stock, and so would be the case with Som Distilleries, because even that stock has run up from I think 150 odd levels to 300 plus where it's trading right now. in a very short span. So the trends are very strong, but the time frame is something which you'll have to tweak. I would advise at least tweak it to 3 years of time horizon and then hold on to the stocks.
Kunal, one more query coming your way. This one is from Rajesh Maheshwari from Indore, and this one is on Tata Steel. Now, they hold 2,850 shares at an average price of 105 rupees per share. For the short to medium term, what's the outlook looking for Tata Steel? Or, should they continue to hold this or maybe exit and look at something that is not dependent on the commodity side?
No, I think you should definitely look to hold on Tata Steel. Now, there is a phase in markets where metal stocks underperform, but when they catch up, they manage to cover up the underperformance in just a very short span of time. We saw that in 2020, 2015, 2008, and so on and so forth for many of these, stocks. So it's a matter of time that Tata Steel will also make a comeback. Now, the stock has already gone through a 2 years of time correction from 2021 highs for Tata Steel, adjusted high of 150 plus for the stock, which means eventually the stock would get into a very big breakout. I would definitely suggest a hold. If possible, you can look to add also.
All right, this one is coming from Tushar, writing to us from Delhi for you, Mr. Sethi. He's asking about IRFC. He's asking if he should look to buy this one at current market price for the long term. His long term is 3 to 5 years. Do you think this is a counter related to the railway sector that he should look at buying right now?
Yeah, this stock is also a good quality stock, and the stock has given good returns over the last few months in line with other stocks from the railway sector. I think one can buy into the stock at the current levels also, and there are some more stocks from the railway sector which I like. Like I've been regularly recommending RVNL, RITES and HBL Power from the sector, which look good to me. So I think he can look at the sector as a whole and pick from the companies which I've suggested, plus the one which he wants to buy, and stay invested with them for long term, and I'm sure he will get good returns from here.
Kunal, the next query is on Sun TV. This one is coming from Shankar. They hold 100 shares of Sun TV at a price of 431 rupees per share. How is it looking like on the medium term as well as the long term basis on the chart? Should they continue to hold this?
You should continue to hold on to the stock. Now, remember that Sun TV is for the first time is given a multi-year breakout. I think around 600 mark, which is, if I'm not wrong, 2021 high, as well as 2018-19 high for Sun TV. Now, this could probably be a scope of a strong turnaround for the stock over the medium to long term. And we've seen historically that the charts for Sun TV are a bit more volatile. I would suggest a hold on the stock at current levels.
All right, another one coming your way, Kunal. This one is coming from Reema, who's writing to us from Pune, and this is about Tata Motors. 70 shares at an average price of 424 rupees per share. She wants to know whether she should go and exit this particular stock. Out of curiosity, Kunal, when was the last time, if you ever had a sell call on Tata Motors?
I don't remember. I think not in the last 4 years at least.
Absolutely. So what should she do with this particular counter? Now, do you think she should book profits or try to average out? Or what sort of a strategy she should adopt?
See, I think what matters over here is the time frame, because if you've gained 50% from your existing holdings of 400 odd rupees for Tata Motors, you would probably be tempted to book out profits, which could be a natural course of action which one takes when there's a 50% kind of a gain for a stock like Tata Motors. But the point is that whether the stock holds meat to rally up higher from current levels and maybe go into that league of 700, 750 plus and maybe beyond that, I believe that there is a strong case which could happen for Tata Motors going forward, where the stock in the next maybe 1.5 odd year could probably scale past about those levels. So if you have that kind of a time horizon as well as further risk appetite, I would suggest to hold on. If not, you can consider booking out profits also at current levels.
Okay, Vikas, this next query is coming in from Venkat Rao from Visakhapatnam, and this one is on, he's a long-term investor. Now they want to know if they're looking to buy something like a PFC, REC or an NTPC, how would that look? Would it be interesting for a long term?
Yeah, Vinny, I've been bullish on both REC and PFC from the current levels. They are excellent companies, and with the kind of reforms which have taken place in the power sector, I think most of the problems have already been addressed by the government. I think both these companies will do well, and from a valuation perspective, they both look very cheap. They are good dividend paying stocks. They've got good dividend yields also. So both the stocks are good, and I think one could buy into them. And as far as NTPC is concerned, I'm bullish on it. Although the stock has gone up recently, one could wait for the stock to correct or use a staggered manner to be accumulating this stock. But over a longer period of time, I think NTPC also would do well from here.
All right. This next one is coming in from Uday Singh, who's writing to us from Hyderabad, and this one is for you, Mr. Sethi. He has active campus 316, 1,000 shares at 316. He wants to know what should he do in the short term. Will you be able to answer in the short term, or should I switch this query to Kunal?
What was the name of the stock? If you can
Campus
repeat it
Active.
again.
Campus Active.
I think it'll be better if you go to Kunal for this.
Kunal, what's your take on Campus Active?
I think it's a stock which you should not look to buy at current levels. It's been holding below the 50-day moving average consistently. There have been multiple breakouts, but for just a couple of days for Campus Active Care, it's been unable to hold above those levels. You should look to ideally consider buying the stock only once it confirms a weekly closing about 325. This is the very recent breakout or resistance for Campus Active Care. If the stock crosses over this level, that's where we would consider this stock to come out of a major downtrend.
Right, because a quick one, this one is coming from Sanjeev Sinha from Lucknow. They're holding around 220 shares of HDFC Life. They want to sell maybe 100 shares of HDFC Life and look to buy something like an SBI Life or a Tata Communication. Would you suggest something like that for the long term, or should they continue to hold HDFC Life?
No, as far as HDFC Life is concerned, I think one can stay invested in it, but since the investor has 200 shares, and if he's sitting on good profits, and if his portfolio requirements are such, I think he can book profits in half of it and switch to, I would not advise him to switch to another life insurance stock. Rather, he could get into a banking stock or a financial stock, an NBFC. I think both these sectors would do well from here, and they've been laggard over the last 1.5 months. But I think as and when the market sentiments improve, or as and when we start heading for the new highs, banking as a sector would clearly participate in it and would certainly do well. So my advice to him would be, if he wants to get out of his 50% holding in HDFC Life, he could look at some good quality or top quality banking stock to ride the rally.
All right. On that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. This one is coming from Korean, who's writing to us from Kochi, and he has 1,000 shares of Reddington at a price of 155 rupees per share. NCC 500 shares at 72 rupees per share. Kunal, he's been holding these counters for over a year. Should he book profits or continue to hold on to both of them?
Continue to hold on. If possible, look to even add further for Reddington. For Reddington, I would probably keep or advise to keep a time horizon of at least another 6 months or so, at least 2 quarters, because I don't expect the stock to do anything great over the next 1 or 2 quarters. But I think post that is where I would believe that most of these mid-cap IT names, which have been underperforming, they would start to scale up significantly higher. So that's the only catch with Reddington.
Because we have this query coming in from Madhusudan from Hyderabad. They are holding Shakti Pumps 50 shares at a price of 720 rupees and Vedanta 200 shares at a price of 300 rupees per share. Should they continue to hold this or maybe switch over to some other stocks?
As far as Shakti Pumps is concerned, it's in focus today. They've bagged a huge order and the stock is up 16 to 17% today. And the investor must be sitting on good substantial profits. And I think with the kind of move which we are witnessing in these agriculture related stocks, I think from here on also one could expect some more upside. So maintain a hold, and if he's a trader or if he's a short term horizon, then he can trail his stop losses and continue with Shakti Pumps. As far as Vedanta is concerned, this stock has been not doing well, and within the metal space, one of the weakest stocks out there. I think one would do well to switch to some other good quality. I think Tata Steel, which Kunal was also bullish on. I think Tata Steel makes better sense, or one could even look at Hindalco from a similar space as Vedanta to be buying into it. They have some debt related issues, and which is clearly reflected in the underperformance of the stock.
All right, this one is coming from Hitesh. Kunal, a very simple question. Should he look to buy TCS at current levels? Long-term perspective he wants, but on the charts, TCS right now?
I'll add a few complications to that. Your time horizon matters over here. Your time horizon could ideally should not be short term, and by medium to long term we would be looking at least another 2 quarters plus of a time horizon. The bigger problem is that whether TCS is the best stock from the IT pack. I would probably expect that Infosys as well as HCL Tech could be far more better in terms of the beta, the price structure, the price nature for these stocks. And historically, we've seen that both these stocks have outperformed TCS by a decent margin in the best phase of the IT run. So that's the only catch with the large cap IT stocks. But other than that, if you have a balanced portfolio, then I think TCS is something which you can go with.
Okay, on that note, let's get started with the rapid fire. Kunal, the first one coming your way. This is from Panduranga from Vijayawada. They want to know they're holding 1,000 shares of Jyoti Labs at 191 rupees and 1,000 shares of Excite at 189 rupees. What should they do, hold or exit?
Definitely look to hold.
Kunal, another one coming your way. IRB Infra is a stock. Pratisha has this counter at a price of 32. Wants to know for the next 3 months what sort of target?
Hold on, look out for averaging out closer to 28 and then look out for a target of 34.
Because we have Subrata Mukherjee who's holding Triveni Engineering and Indico Remedies. How are they looking for the long term? Continue to hold?
Yeah, both are good quality stocks, and both the stocks will do well from here. So hold.
All right, Anjali, who is a senior citizen, has Adani Transmission, I believe is Adani Total Gas, has a price at a price of around 320 rupees per share. 770 rupees per share. Kunal, what should she do?
As of now, hold, but keep a trailing stop loss of 640 if it's a short-term position.
Okay, Kunal, one more. This is from Krish, and they have a query on Astral. They're holding 100 shares at 1,629 rupees. What should they do? Continue to hold this, or maybe look to sell 50% and buy SRF?
Yeah, that could be a better strategy.
Mr. Singh from Pune wants a technical target for Mukan. The 128 is a buy price.
Bullish on the stock and would look out for a target of at least 220.
Vikas, Swati wants to know in two of these shipping stock names, GE Shipping, Garden Reach, Cochin Shipyard or Mazgaon, what is looking attractive for the next 2 years?
I think the public sector defense related stocks would do well. So I would particularly vouch for Mazgaon Dock and Garden Ridge Shipbuilders. Although they both run up substantially, but I think from here on also, if one is willing to give 2 years, they would do well.
Okay, Mukesh Kumar wants to know about PFC. Kunal, 260 shares at an average price of 117. Invested for the long term. What should he do?
Hold on to it.
Vikas, Mishra Dhatu, viewers holding, Hari is holding 1,500 shares at 90 rupees. What should they do? Continue to hold for long term?
First, a big compliment to the investor, and can continue to hold on even at the current levels.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Vikas, for joining us on the show and resolving all of our viewer queries. And viewers, with that, we come to the end of this edition of Buy Now, Sell Now. It's a goodbye for Vinny, myself, and the team that put the show together. But stay tuned, Markets at Noon coming up next.